We're going to do a video on stocks, Carnival Cruise Stock Analysis with technical analysis. And we've got a daily chart here of Carnival Corporation. And as we can see, Carnival put in a bottom down here on the 13th of October. Looks like actually they did it on 11th. A lot of stocks did the 13th, but Carnival did it on 11th at $6.11 and had a tremendous rally all the way up here to $11.49, almost doubled the stock. So that was a really great rally for Carnival. However, as you can see, it's still below and has been below the blue 200-day moving average all the way back here since October of 2021. So Carnival is still in a bear market. Now this is obviously a bear market rally. It's above the 20-day moving average. It's above the green 5-day moving average, below the blue 200-day moving average. And as you can see, as it approached the 200-day moving average, Carnival, we had a huge gap in here from almost $11 down here to a little bit below $10. So for a $10 stock, this is almost a 10% gap in this stock. Now it caught support, and you can see it's been catching support on the red 20-day moving average. It caught some support there on Thursday, and it closed a little bit above the moving average. So that's all a good sign. It closed below the 5-day moving average, which is no big deal given the situation here, but it did close above the 20-day, and it stayed above the 20-day ever since this rally. But this gap is a huge issue, and we'll take a look on the weekly chart and see what's going on. I'm going to show you the hourly chart in a minute, and then we'll look at some algorithmically generated prices for this stock if we have them. Let's take a look real quick. This is a weekly chart. You can see the red 20-week is flat, the green 5-week is up, and it's closed above both of them. That's a good sign. However, you'll notice that it closed right here for the week below last week's close. That's a negative. So it made a new high but closed below last week's close. That's not good. It's a higher bottom. It's above the moving averages, or right on the moving averages, so that's good. And it also looks like it made a new high just barely above all this resistance here. So that, I would say on the net, that's all positive. It doesn't look overbought or anything, so the stock looks okay right there. Let's take a look at the hourly. It's hard to see this hourly chart, but we can see the same thing on the hourly that we saw on the daily. We see this huge gap here. However, we're above the 200-hour moving average. You can see it was below it up until about July here, then it fell down below it again up until the end of October, third week in October, and then it rallied strong above it. So all in all with this stock, I see not a lot of negativity. I don't see on the weekly chart that looks good. On the daily chart, let me get this to work. I don't see this daily chart being that great. Let's see if we can get it to work here. If you take a look at this daily chart, there's just not a lot of energy going on here. First of all, this downtrend line is not sloping aggressively enough to give me any confidence that the stock's going to be able to get over it, because I don't see a huge amount of energy in this stock given that huge gap. I know it's really small, but if you take a look at the bigger picture, the stock's in a bear market. It looks much better on a weekly than it does on a daily. So my analysis for this stock in the short term, if we expand this a little bit, is that this stock's probably going to trade sideways through here. My guess it would probably be trading sideways down as low as this $8.65 level, and as high as the high it just set, this $9.73 level. So let's say $9.70 to $8.50, somewhere around in that level. I think the stock's going to trade probably for quite a while, probably for a couple weeks. And it's got to work out whatever problems it's got here. There's too much selling here. You'll notice we almost, on this, depending on how you expand this chart, we almost got vertical here. So it got too far too fast, sold down hard, held its moving average. But I suspect there's issues with this stock that have to be worked out in terms of giving enough discount to get long-term money back in it again. So I think it's going to have to get down in the eights, probably $8.75, something like that, to get people to buy this stock. So I would look for a false breakout on the 20-day moving average to the downside, and then I would look for new money to come in to buy it and see if it can't push it up. And I think all of that's probably going to take at least a couple of weeks, something like that. So that's my best guess on Carnival. Let's take a look and see if we cover Carnival. I'm not sure if we do. RBM Research puts out algorithmically generated entry prices every day for 190 stocks, and we do cover Carnival, but there are no There were no prices out here for Friday. This is Friday the 18th, and you can get access to all of these prices by heading over to rbamresearch.com, and I'll show you how to do that here. There's a link in the description below. You can head over to rbamresearch.com. No credit card required. Put in your email address and get free access for 14 days to Carnival and the other 190 plus stocks that we cover algorithmically every day before 7 a.m. We cover the major forex pairs, stocks, and the most liquid futures contracts, and you just head over there, put in your email address. Keep in mind, everything you've seen and heard on here is for entertainment purposes only. Can't use our information for anything other than entertainment. You should always do your own analysis, and you definitely trade at your own risk. If you like these videos, you can get one custom made for you. There's a second link in the description. You can just follow that over there for details. If you like this video, please click the like button. If you want to subscribe, please do that as well. And if you like this video or you just have a comment on it, please leave us a comment in the comment section below.